inside of that, I think that this year I can't guarantee it, but I think we'll come to conclusion on that top. So somewhere in the vicinity of $50. When it breaks above that, then it's anybody's guess as to where the markets will go. It's still way below its true value. And for spot gold, I could see it easily 3,500, maybe even 4,000, because the unknown into a new presidential term with a pretty aggressive president.
Gold's price remains significantly undervalued, but a breakout above $50 could signal a significant rally. If this happens, spot gold could easily reach $3,500 or even $4,000, driven by uncertainty surrounding the upcoming presidential term and potential policy shifts under an aggressive administration. Market dynamics and corporate movements could further support gold's upward trajectory. Lynette Zang, a well-known financial analyst and the chief market analyst for ITM Trading, explains that the ongoing economic crisis is shaping up to be a battle between Trump, the Federal Reserve, and the markets. With rising debt across government, corporations, and individuals, central banks push for lower interest rates to fuel inflation. However, growing defaults make this a perilous time for investors. The best strategy for safety lies in sound money, physical gold and silver, as well as essential resources like food, water, energy, and community security. Lynette Zang exposes that a new currency system is emerging, and there is concern that it could become a government-controlled surveillance tool. To counter this, people must unite globally and avoid the current debt-based fiat system. Individuals can reclaim financial power by investing in assets that hold value beyond government control. This is a rare and critical opportunity for people to influence the future of money and protect their wealth from inflation and central bank policies. Lynette Zang points out that the US dollar, while still technically the world's reserve currency, is facing a gradual decline. A significant shift began in 2008, with a noticeable run on the dollar emerging by 2012 as key debt buyers like Japan and China started selling rather than accumulating US debt. This mirrors the 1960s run on the dollar when foreign governments exchanged their dollars for US gold reserves. As confidence in the dollar erodes, the global financial system is moving toward a hyperinflationary depression, with the US being hit the hardest. The decline of the dollar's dominance signals a significant economic transition, increasing financial instability worldwide. Before we start, subscribe and hit the bell icon to stay updated with our latest videos. We'd love to hear your thoughts in the comments.
You know, what I see is a battle royale, and not just between Trump and Powell, but the markets and the Fed, right? Because the Fed wants they really, globally too, the central banks want to lower interest rates because they want to inspire more inflation, right? Because we've got this massive wall of debt, whether it's government or corporate or even individual debt, and we're seeing, the defaults rise pretty significantly. So this is a very dangerous time. I mean, it's extremely dangerous whether you're in the market or you're wondering what to do. And I'm going to tell you, you got to get to safety. And safety is sound money. Physical silver, physical gold. And they have different functions. But for me, this is a battle royale. I'm going to the sidelines. I've got my safety net. And that's also food, water, energy security, barterability, wealth preservation, community, and shelter. And since the last time we spoke, I had just started on my community journey with you, right? And we talked about what happened in Australia, where I just threw the materials out and started talking about community. And since then, I've really worked hard. I've traveled quite a bit to develop that global community and a sound money movement, because we've got a new currency that's coming in. And if they have their druthers, it will be a surveillance currency. So we need to come together on a global basis and take that out of the crappy debt-based fiat money that they're inflating away and put it into sound money that is above all governments and above all central banks, because it is used, both of these are used in every single sector of the global economy. And while I always spoke about that, to be truthful with you, there's 8.4 billion people on this planet. And so people sit there and say, well, what can I do? I'm just one person. And that's true. And I can easily say that too. I'm just one person. What can I do? And that's true. But coming together, there's so much more of us than there are of the governments. We need to take our power back, and we need to have a say in the new currency. This is our opportunity, really. It's critical. This is the opportunity. Well, with the U.S. dollar, and actually, it's not just the U.S. dollar. This is true on a global basis. What's good about the U.S. dollar is that the Federal Reserve on the FRED, F-R-E-D, which is the Federal Reserve Education Department, they post the purchasing power of the U.S. dollar because it is still technically the world reserve currency. But I see something that is happening today, and actually it started in 2008, but if I look on the graph in 2012, we saw a run on the dollar begin. And I say that because both Japan and China, key buyers of our debt, have been selling the debt and not buying more. And that is very similar to the run that we had on the dollar back in the 60s when foreign governments were sending in their dollars and pulling the gold out of our system. So when you have a run on a currency, and this happens to be the world reserve currency, that's not really true anymore. And it hasn't been for a while. But that is a huge shift. And what it tells us is that in the U.S.,
Lynette Zang highlights that if you're speculating, gold is currently overvalued, but owning gold is essential to preserving purchasing power significantly as the value of fiat currencies declines. With rising rents and housing costs, a fixed-rate mortgage allows you to repay debt with devalued currency, much like the government. Calculating how much gold you need to cover is crucial if you have a fixed-rate mortgage. Over time, gold's value can be appreciated, allowing you to pay off debt with less gold, as seen historically in cases like Venezuela's revaluation. The key is to secure enough gold to ensure you can settle any debts quickly. Lynette Zang highlights that gold and silver are indestructible and retain their value as money. To protect these assets, people use fireproof safes and fireproof boxes, or even bury them in the ground in sealed containers like PVC pipes to guard against water and fire damage. Some individuals with large properties even use heavy equipment to hide their wealth beneath large boulders. This practice has historical precedents, such as when gold coins were found buried and valued at millions of dollars, proving that gold and silver can preserve wealth through challenging times. Now let's dive into the interview.
I look at it two ways, right? Number one, if it's for speculation, it's severely overvalued and that will come down. What you need to do is make sure that you own gold to hold your purchasing power so that you have something to work with on the other side of it. But to your point, everybody's got to have a roof over their head. And it isn't just housing to buy a house, it's also rents that are going up at an insane level, right? So part of the strategy is the ability to repay that debt with dollars that have no value or fiat currency that has no value, which is exactly the same strategy that the government utilizes. It's always repaying the debt with dollars that have less and less and less value, right? So based upon your mortgage, you want a fixed rate mortgage. Right. And I know in parts of the world, you can't, like in the U.S., you can get a 30-year fixed rate mortgage. You can't always do that in different parts of the world. But if you get a fixed rate mortgage, there is a calculation that we can use to determine, well, how much gold do I need to pay off that mortgage? Because we know what the true fundamental value is. You can't count on Wall Street to do that. But the central banks will do that to get confidence back when they do those overnight revaluations, right? So let's just make life easy and say, okay, right now it might take 10 ounces of gold to pay off that mortgage. Well, by the time that happens, it might take a quarter of an ounce to pay off that mortgage. So you've got to have a place to make your last stand. And as long as you can qualify, which is a big problem for a lot of people, right? But as long as you have the ability to take out a mortgage, you buy enough gold so that you can always, boom, pay that mortgage off just like that, right? Now, historically, 25 ounces of gold buys an entire city block, buildings and all. And that's why I say, like in Venezuela, I think it went up overnight 3,500% when they did that overnight revaluation. Then you just sell the amount of gold you need, you pay off that mortgage, boom, you're done, right? But gold is also indestructible. So in any form, gold and silver are monetary at their base, but you're right, it does put another perspective on there that you have to think about. So there are fireproof boxes. There are a number, I had some clients that kept their gold actually buried in the ground, but inside of like a PVC pipe that was completely sealed off, so they didn't have to worry about water, they didn't have to worry about fires, right? And they, if you're living on a farm, like a number of my clients had large pieces of property and heavy equipment. So they'd put a huge boulder on top of where they had their gold and silver, and only they could move it with a big, heavy equipment. But that's going to survive a lot of things. And we've seen that. We've seen that in, 1933, people thought, oh, their gold isn't worth anything, right? But remember that somebody bought this property and something looked a little funny over by a tree, and they went in and they started digging and they found this whole can of gold coins, all different sizes, which this was maybe about 5-7 years ago. At that time, the current market on those coins, especially since they were pre-33, was somewhere north of 10 million, right? Be a lot more now, but that's how they maintain their wealth over time. That's what gold does, and so does silver.
As the global financial landscape shifts, gold and silver are valuable assets for wealth preservation amidst economic instability. With the rise of new currencies and concerns over inflation and government control, securing physical gold and silver is increasingly essential for safeguarding purchasing power. The US dollar's gradual decline further emphasizes the need for alternative investments that retain value outside government control. How can individuals prepare for the potential economic shifts driven by the decline of the US dollar? How can gold and silver protect against hyperinflation and rising debt costs? Share your feedback in the comments below. If you found this helpful video, hit the thumbs up and subscribe to keep up with our latest updates. We appreciate you being a part of this journey.